we're an advocate for the insured, much like their CPA is when they file their taxes. They don't want the IRS telling them what they owe. You want to be told what they're going to pay. It's the same thing with us. We go in there and we tell the insurance company what they owe on the claim, not they want to pay. It's a different mindset, basically.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 351. Let's say you own an apartment building and there's a fire that destroys one of the units, or maybe a tornado rips through your community and demolishes an entire building. What if there's an earthquake and your entire property falls into a crevasse? These are extreme examples, I know. And isn't insurance supposed to cover those costs anyway? Yes, but that's when the problems really begin. Working with an insurance company to cover the costs they're supposed to can be a tricky business. And that's why you might consider hiring an insurance adjuster who can get you through the process smoothly. Jack Hanks was awarded Public Adjuster of the Year for 2022. So he's the perfect person to fill us in on just what an insurance adjuster is, why they're necessary, and how you can benefit from their services. Jack, welcome to the show.
Thank you we appreciate being here, man. We're excited to talk.
You're an adjuster. What does that mean? And what do you typically do for people?
We are a licensed public adjusting firm. We're licensed in 38 states across the country, plus Puerto Rico. So our job is to represent the property owner to ensure they get treated fairly, properly within the state guidelines and the state statutes within the policy to get their proper payment on the loss that was incurred at the property they own and the insurance company insures. That's easier said than done, however. Yeah, it's a little scary stuff.
Take us through that. Let's say someone does have a fire at their apartment building and several units are damaged. What typically happens? Like before you even come into the picture, what is a typical experience for the owner?
Well, without representation, typically what happens is most insurance companies want you to believe they're your friend and they're there to take care of you, when they're actually instructed the opposite. They're there to minimize the cost, minimize the damages, and minimize the payment going out to their insureds. You know, I caution all our clients and all our prospective clients that at the end of the day, the insurance companies, much like we are and you are for-profit organizations, right? So they are there to bring money in from their policy premiums. And then the great part for them is they get to limit what they pay out on the other side by having their own experts and their own adjusters adjust the losses according to what they see and what they feel is deemed necessary. Our job, on the other hand, is to come in and get the claim right. Whatever the value of the claim is, that's what our proposition is, to get in there, to get down the nitty gritty, go through the policy, find all the coverages intact, find those gray areas that the insurance company is avoiding, and make sure that our clients are 100% indemnified. And then we fight and claw to get the proper payment to our insured, to get the money, to get the repairs done properly with no shortcuts. That's the idea. So we're an advocate for the insured, much like their CPA is when they file their taxes. They don't want the IRS telling them what they owe. You want to be told what they're going to pay. It's the same thing with us. We go in there and we tell the insurance company what they owe on the claim, not they want to pay. It's a different mindset, basically.
What gives you the power to do that as an adjuster? Why do they have to listen to you, or do they ever just ignore you and disagree?
The good news is they can't ignore us. So we are licensed in all these states. And once our license is in effect and we are hired through a notice of representation, the insurance company has to deal with us in our firm during the course of the claim process. They can't ignore us. There's state statutes involved. There's laws and plenty of litigation involved there. They have to listen to what we say, and they have to work with us. Many, against their will, however, but we're pretty good at getting their attention and getting things done. So that's what we've done for a long time.
And at what point in the process do you come in? And when should someone get in touch with you?
Well, in a perfect scenario, we're there right immediately when the loss happens, or they're very soon after. Unfortunately, a lot of clients wait till the very last minute, and they're 8 months into the claim, and the stack of papers from the insurance company is that high with denials and limitations. So, in a perfect scenario, the immediately we actually file claims on behalf of a lot of our clients right when the circumstance happens. We're there, we're filing the claim. Our people are on board from day one, and we're controlling the narrative. We're getting, we have a lot of claims. I got a claim today from Hurricane Ida still that the people were getting screwed for about $800,000, the HOA. So we're going to come in and pick the ball up from there. But, the quicker we're involved, the better. It's a much smoother, streamlined process. If you can imagine, the insurance company it's one of those things you're basically guilty until proven innocent when you have a claim. So the quicker we get in, once that claim happens, the better for all of us, mostly the insured, because we can get the thing done quicker, faster, and get the right amount of money a lot more efficient than without us, unfortunately. But that's just the world we're living in right now. So
usually when there's a claim, you call your insurance agent right away, and then they're supposed to come out and take care of you. But I hear you saying we should be calling you even before we call our insurance agent.
Agents usually, most of the agents they're good people. That they're there to take care of their clients, and they're there to sell policies. They don't get involved in a claim process. And actually keep in mind, every time a claim happens, they're getting banged on the back end of that thing. So, if you keep in mind, their best interest as well is to limit that payment. So at the end of the day, we're the only advocate that is 100% on board with the insured. We are there to take care of them. The agent has their best interest at heart. The insurance company has their best interest at heart. And we are the ones there fighting for the insured to get it right. So, agents are there for a role. They're there to explain coverage, or they're to get their premiums purchased and things like that. But at the end of the day, they're a very distant cousin to the claims department and have very little to do with it. So claims go much, much, much smoother when you have your own advocate on board in the beginning of it, or soon thereafter, of course.
Can you give us a couple examples, Jack, of like when you were able to come in and really make a big difference, and then on the opposite end, when you came in maybe too late, or the odds were stacked against you and you weren't able to help?
So we have a really large client who owns, I think, 60 or 70 shopping malls throughout Texas. Same exact storm, same exact everything. One claim, we came in early. We were there. We filed the claim. Took about 60, 75 days. In and out, $2.5 million payment. Boom, boom, boom. Work is getting done. Same owner waited about 9 months to get us involved beforehand. This is before we actually had a relationship. The insurance company started at $38,000. And I think as of today, we're right around $3.5 million on that claim, but it's going to take us a full year to get to that point. So you can see the difference. Same owner, same policy, same exact storm, same city, just different ways of getting there. So it is, once again, the quicker the better for us. And I get it's a different thought process, but we've had a lot of claims where, so keep in mind the insurance company is going to send out engineers, going to send their own investigators, and they are getting paid by the insurance company, right? All these engineers they bring out, and they're there. I guess the simplest way to explain this is it's the insured's job to present the damages to the carrier and explain why it's covered. It's literally the insurance company's job to explain why it's not covered and to limit that payment. That's exactly what it's supposed to be. And insurance companies will go out and they'll spend 50, 60, 75, sometimes hundreds of thousands of dollars on experts to limit that cost on that claim. And so we get these reports back that are 75, 80, 150 pages long of why not. And unfortunately, sometimes at the end of the day, there are timelines involved. And on a commercial project, usually it's 2 years. They have to get the claim filed and paid. And sometimes if we get a claim a year and a half later, there's not a lot of time for us to work and get the results we need. So that's the problem. When people wait too long, the stack of cards gets deeper and deeper and deeper with more stuff to go through. And that's the problem in general on a large insurance claim, is they're going to spend money not to pay out money, if that makes any sense.
Sounds like the people that the insurance company hires to come out and do the analysis and the engineering or whatever, they're working on behalf of the insurance company. So their interest is in making the insurance company happy.
They're there. So they hire the same 5 or 6 firms over and over and over and over again So there's very little independence or transparency there. I mean, if you're getting millions of dollars a year from an insurance company to state your opinion, and it's a great cash flow for you, human nature, human tendency is to lean kind of that way to make sure that your client and your cash flow is taken care of, right? So if they keep finding the opposite and keep saying there is damage to get paid for, their reports are going to be far and few between. So once again, it's a profit center for a lot of these engineering firms, and it's sad. But once again, I do understand it, and it's America, so we're all entitled to our opinion and entitled to make a buck. But at the same time, there's going to be some ethics and morals involved, and a lot of times there's really isn't. So our job is to come in and level that playing field up, to load up our side with experts and weather reports and engineers and adjusters to make sure that we're playing fairly on both sides.
We pay for insurance to protect us from disasters, but how much does it cost to hire you or your firm or a public adjuster to protect us from the insurance company?
Our typical fee is 10% of what we collect. So we're on pure contingency. So literally, there's never any expense out of the owner's pocket. So we'll come in and work on contingency, and we get paid as money comes in. So on $1 million job, or $1 million claim, for instance, our fee would be $100,000. However, usually that means we've collected 4 to 5 times more than the insurance company has allotted. So we're an investment basically, right? If it's like anything, the better CPAs out there are getting a really good buck a year to make sure that the taxes are thinner than they would be. So it's the same thing with us. Our fee is paid when the checks are coming in from the carrier. But at the same time, our success ratios are way above what they're usually going to allow. So it's a pretty dang good investment for us to get a 10% fee on that stuff.
If someone were to hire you, they're not paying out of pocket for any engineers or reports that you're generating. It's purely coming off of what you're able to achieve.
Yeah, we incur that cost, and there's a risk, of course, for us. So we're very particular what we look at, and before we get involved, we'll read that policy. We'll look at the loss itself, and we'll set those expectations for the owner of what he or she can expect in the process. We don't like surprises. We don't want our owners to have surprises. So we're very diligent up front to lay in those expectations out on time frames, on expectations, on payments and things like that. And if we don't win and we don't get paid, we don't get any money in our bank account. And that's frowned upon here. But we do a real good job of fighting and getting things done. And after 30 some years in this business, we know how to kind of navigate the waters and play the chess game to make sure that our clients are taken care of thoroughly. I promise you that.
Since you've seen so many different instances, what are some of the mistakes that you see property owners making when they do set up their insurance in the first place? And I'm thinking any example is great, but I'm thinking specifically the difference between like actual value insurance versus replacement cost insurance. What do you advise, and what are the mistakes that people should be avoiding?
So we get a lot of policies in here that are ACV only, which means actual cash value, which is not a great policy to have. So for instance, let's say you own storage facilities, right? It's all metal roofing, right? And it's an ACV policy and it gets hit by hail and it's 35-year-old metal roofing. Well, an actual cash value only owes for the amount of what the roof is worth now for today's value. If it's 35 years old and it was worth $200,000 back when it was new and ACV only, it's going to shrink, right? So that claim is only going to be a $30,000 to $40,000 claim. And at that instance, we would actually be harming the client by coming in and advocating for them because there's not enough money to do the work anyway, right? So it limits what we can do on that claim. So an actual cash value policy is something that needs to be looked at very, very difficult because there's not a lot of money to play with on that stuff because it limits what the payback can be on a claim. Same thing on a lot of the newer policies. You guys are going to start seeing a bunch of coinsurance penalties, and that's coming up more and more and more and more. The property values are going so fast and furious above and beyond what it was even 2-3 years ago. People are not updating their policies fast enough. So let's say your facility was worth $1 million 3 years ago, and now it's worth 1.8 million, right? But you're only insured for $1 million, and you have a 20 or 30% coinsurance penalty right on your deck page, right there in black and white that you purchased, which means you did not insure your building for enough money. So the insurance company is only going to honor that first $1 million. And then the $800,000 discrepancy is going to be a penalty against you for the coinsurance. So that $1 million claim or $500,000 claim is going to go down by 30, 40, 50% sometimes, depending on the coinsurance. And your claim's only going to be worth half the money. And there's nothing we can do about that either. So we actually would be harming the client on that. So the policies purchased are the key to all this. You basically get what you pay for, right? If you have an RCV policy with full benefits and no exclusions for hail or wind or whatever, and a storm does hit your location, you're going to be, we can get you covered and get you handled. If we have all these limitations in front of us with exclusions, coinsurance, ACVs, the best attorneys in the world aren't going to be able to do anything with it because there's just nothing there to work with. And, what I can see on premiums, it's not that big a difference to get fully indemnified. It's maybe a couple thousand a year. Like all of us, though, when you go to buy your premium or buy your policy, first things out of our mouth, right? Give me the best deal you can get. I don't want to be paying a lot for my insurance. And then next thing you know, 3 years later, your thing's wiped out and you're getting pennies on the dollar because you were thrifty in the beginning. And that I've seen it more than I want to talk about. I mean, it happens weekly, and here we see these policies, and there's nothing we can do because there's literally not enough coverage to get everyone paid on that thing. And it's sad, but once again, buyer beware, you get what you pay for, right?
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB & Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com.
When you say ACV, that's actual cash value. And basically that's the value depreciated over the number of years that it's been in place. I think you said RVC or replacement value.
Yeah, that's real cash value. That means if it's a $100,000 roof, you get your full $100,000. There's no depreciation. You get paid in full for the value of your roof for today's market. Okay.
And is that technically the same as replacement value?
Yeah, same thing. Yeah, replacement cost. Yes, sir.
You talked about coinsurance, which is basically if we're not keeping up to date with because everything has appreciated so much over the past couple of years, if our insurance is still 2 years, still valuing it where it was 2 years ago, we're actually going to be penalized for that difference when we make a claim.
If there's coinsurance in your policies, which most commercial policies have, there's a little coinsurance clause in there that you have to insure at least 80% of the value of the property or above to have your full benefits. And a lot of people just don't. I mean, my house here in Scottsdale appreciated 58% the last year and a half. It's insane, right? So you got to keep up on that. So the insurance company does have an opportunity then to start minimizing the claim on their side by invoking the coinsurance clause, which is in the policy. And it's usually 20%, 30% or whatever. But on $1 million claim, $200,000-$300,000 hit, that's a lot of money for everyone to incur because that's basically coming out of your pocket. So basic coinsurance, think of it this way, whatever that percentage is, you are basically, as the owner, insuring that portion of the building yourself, assuming that percentage of the risk. And that's not, insurance is there to transfer risk, right? That's why people buy it. And you want to make sure you're fully have full value of your property. So I encourage everyone listening to this that here's this, man, get with your agent, pull your property value and get your insurance updated. Help to God, you never need to worry about it. But when you do, you want to make sure that the numbers equal out to what the value of the property is and your contents as well. Because vehicles right now are going through the roof. Everything's going through the roof right now. It's insane. And we see it way too often in this office. I'll tell you that.
Any other decisions you'd like to see our listeners and owners that you work with make up front that will make your experience easier for them?
Yeah, I mean, there's a lot of exclusions people are buying into, like in the Texas market and Florida market, Louisiana. There's a lot of wind and hail exclusions that are coming because there's so many claims there. And the insurance companies are basically they don't want to insure these roofs anymore. So if you have properties in those coastline areas, I encourage everyone to buy proper coverages on your wind and hail and hurricane and windstorm coverages, because once again, those deductibles could be we've seen 5% deductibles. I mean, on a $20 million building, they have a 5% deductible. The first $1 million is out of their pocket. And, if the roof gets blown off and the roof's worth $1 million, there's no claim there either. So, watch your deductibles, especially the wind and hail deductible. That's when people really get stuck, because that'll be in the fine print, right? Your deductible will say $5,000 per event. And then you'll look down, except for wind and hail or wind and hurricane or hurricane and hail, you have a 5% deductible, which means 5% of what your insurance is covering comes right off the top. And that could be a hefty deductible for everyone to incur. They don't owe anything after that. I mean, they only owe after that deductible is incurred. Keep that in mind.
Those are real bite the bullet costs, because when you're looking at the wind and hail, and in California, the earthquake insurance, a lot of times it's just so expensive. It just doesn't pencil out or make sense. But I'm hearing you say you should pay for it anyway, because when that happens, if it does happen, that's really going to hurt you.
Yeah, so it's luck of the draw, right? You may go for 35 years and never have a claim, which we all hope that's true. But at the same time, you may go 6 months into it and have a claim, and you could lose everything you've worked for the last 20 years on a claim if you don't have the right coverage, and it could wipe you out $1 million in cash. I don't know anybody can really wants to write a big $1 million check out. So insurance is relatively cheap when it's packaged correct, right? So, I mean, don't be afraid to shop it. Get a really good broker that has some leverage with the carrier, and they can get you the good premiums and the good coverages. That's going to be the key, is having a real good broker on your side who has some, power and some packs a punch with these carriers to make sure you guys are completely indemnified properly. It's very, very important.
Give us your best white knight, save the day at the last minute story that you have as being an insurance adjuster.
One of them I'm most proud of, actually, is here in Phoenix. We had a fire probably 4.5 years ago. It was a Sunday night. It was a church in South Phoenix, and it literally just collapsed. I'm talking no fire, no flood, nothing. It literally just fell to the ground. Thank God, number one, nobody was in the church when it happened. It was like 2:00 in the morning. So we get a call. We go out there and we're looking around, and I'm reading the policy, and I can't find, the collapse is excluded, right? So there's no coverage for this thing. So we're looking, and I finally get the certified policy from the insurance company. And that's another point I want to bring up. The policy everyone has on their phones is a generic policy. It's not the real policy y'all purchased. So every time we sign a claim, we order the certified policy from the carrier, because in that is your actual, it's the contract that you all signed with your insurance company. That's it. And there's one word or one phrase in that policy can change the entire dynamic of a claim. We order the certified policy from the carrier, we get it, and we're reading it. And we found a little inclusion, not an exclusion, but an inclusion in the policy that if the wood was rotted and it was hidden by termites and it caused damage, there was coverage on that. Okay. So the demo company went out, and we literally found this beam about 30 feet long, that the center of it was rotted out by termites. The church had a monthly termite and pest control treatment done every month. We had those receipts. We hired an engineer to come out and verify that the actual collapse occurred from this hidden beam up in the attic that was wrapped, that nobody saw, that the termites ate through and collapsed the whole dang building on a Sunday night. And we got him almost $1 million for that church from zero. There's a 1-2-sentence phrase in a 145-page policy.
So you really poured over that policy to find that phrase.
Yeah, I mean, so that's what we do. That's a great. So policies, especially in commercial world where you guys play in, policies are very complex, and they'll give you coverage, take it away, and put it back in several areas. So we literally have a staff here. All they do is read policies from the front to back to find those little hidden gems in commas or ands or buts that make the difference on a claim. I can tell you the agent nor the insurance adjuster read that policy like they should. And that's where we come in to find that stuff. That's what we do, right? We're finding that gray area to make coverage on and find coverage for our clients. That's what we do.
Two-part question for you. One is, if someone does experience some sort of mishap or disaster, how do they get in touch with an insurance adjuster right away if they don't know who to call in their area? And then I also would love it if you could tell people how they could get in touch with you and your company.
So we're in 38 states, so we handle most of the country. We have guys spread out from coast to coast, north, south, east, and west. You can guys get a hold of me. I answer my cell all the time. It's 480-766-6565. My email address is jack, JACK, @vpa.claims. There are some great resources out there. There's a thing called NAPIA, National Association of Public Adjusters, NAPIA.com. You can go in there and click on a state, and you'll have different licensed adjusters that are licensed in that area. Check their credentials, make sure they're licensed, bond, and they have resources available. That's a great way to find them as well. But you can always get a hold of us, and if we can do the work, we can certainly I know literally almost every PA in the country because we've trained so many of them. I can usually get a good referral for somebody if we can't handle a claim ourselves. So.
And is your group in Michigan?
We are, yeah. We probably have 35 to 40 claims in Michigan right now. So,
any final words of advice for our listeners?
Yeah, read your policies. Know what you have before the loss is even happening. Don't be afraid to spend a little bit extra to have proper coverages. That's my big thing. Is once again, we all pay for what we get. We all pay for what we get. So, and have a team handy, ready to go, and ask questions. And if you do have a claim, make sure you get a second opinion. You have representation, whether it's us or a property attorney or another public adjusting firm. Have somebody on your side just to make sure you're getting properly taken care of, because I've seen way too many times people get life-changing bad experience because of an insurance claim. And that's not how it's supposed to work. It's supposed to put you back where you were, not make you less than.
Thanks for making insurance so interesting today. Fantastic advice for everyone. I'm definitely going to go look at my insurance policies now. Thank you so much for having this conversation with us.
All right, my friend. I appreciate it, man. Thank you so much.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbAssociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.